Well, miners. There are no miners anymore. So therefore, all of the activity of miners of selling the tokens that they've earned, they probably sell about 80% of the tokens that they get just to fund their own activities. That's about $1 billion or $2 billion a month that's out of the market. So that's a small supply shock. There's no ongoing pressure every day from miners who've been rewarded with Ethereum. So that goes. Okay. Then the staking activity, there's currently about 9% of all Ethereum staked. By most guesses, that number should rise to about 30% because initially we should see some outsized yields, maybe up to as high as 20%, maybe it's 15%, who the hell knows. But either way, it's going to attract a lot of capital into staking. And so that becomes very interesting itself because if it gets up to 30% of all ETH staked, that's 30% that is dormant.
The much-awaited Ethereum merge, which will facilitate the joining of the existing execution layer of Ethereum with the new proof-of-stake consensus layer, is almost upon us. Earlier in the month, Ethereum core developers announced that the merge will occur during the week of September 19, 2022, which is joyous news to all ETH investors who have been waiting patiently for the big upgrade. This transition from the more energy-intensive proof-of-work to proof-of-stake has been in the works for a long time and is currently one of the hottest topics in the cryptocurrency industry. It is so hot that Real Vision CEO and known Ethereum investor Raoul Pal has described it as the biggest crypto event since the launch of Ethereum and the creation of stablecoins. In a recent broadcast, Pal speaks extensively about the Ethereum merge and how vastly it would improve the network and benefit inventors. According to the macro guru, the merge will create both demand and supply shocks. It would significantly reduce the supply of Ethereum while also amping up demand. This imbalance in demand and supply will, of course, cause prices to shoot up, making the most popular altcoin more appealing to all categories of investors. In his broadcast, Pal also discusses the ESG implication of the merge and how it will help the Ethereum network grow much faster. This is a must-watch for all existing and prospective Ethereum investors. So ensure you watch the video to the end, hit the like button, and drop your comments and observations below. Everything helps with the YouTube algorithm so we can continue to bring you these videos. Thanks and enjoy the video.
So, why Ethereum now, apart from the charts, is the merge? The merge is probably the single most important thing that I can think of that I've seen in crypto since the invention of stablecoins and the launch of ETH itself. Now, that's quite a big statement, and there are risks that it doesn't work fully. I get that. I'm prepared to take the risk because I think it will. You may not be prepared to take the risk, and that's fine too. So let's talk about the merge. So first we need to go back in time a little bit. We go back in time to the burn. So this is the EIP 1559, and what that did was change the dynamics of ETH that burnt using network activity that burnt ETH. Now, it reduced the supply of ETH by about 65%, and in a strong demand environment, supply reductions are important. They're not in most other times, but really when demand meets reduced supply, then things get interesting. So ETH massively outperformed Bitcoin because of this activity, because the ETH network is being used for DeFi, NFTs, all sorts of stuff. And with reduced supply, the price went up faster. That kind of makes total sense to me. But the merge is something much bigger overall. The merge is where Ethereum goes to proof of stake as opposed to proof of work. So now you're not having computers crunching the maths and being rewarded as miners for doing the work. What you're doing is you're pledging your Ethereum for a year to secure the network. And that's called staking. And staking participates by you getting a yield for doing that, which is staking your coins, i.e. you can't use them, and you get a return. So I'll come on to that in a sec. But what's really interesting here is this is a supply reduction of really monumental proportions that's about to happen. Now, I'm more of a demand side person than a supply side person, but when demand and supply are both in shock, okay, then we got something interesting. So what's the supply side? If it gets up to 30% of all ETH staked, that's 30% that is dormant. That's 30% cannot be used for DeFi, CeFi, rehypothecation, shorting, liquidity provision, nothing. It's out of the system. Okay, that is a massive supply shock. Then, on top of it, ETH staking gets its yields from network activity. So as the network is active, it generates the yield. Add that to the burning for the network activity as well, and what you get is actually something that looks like it's going to be deflationary, i.e. there's going to be less ETH every day than there was the previous day. So that itself is really interesting. So as opposed to be a daily sell pressure of excess ETH in the market, it becomes a daily buy pressure.
Upon the merge, there will be a reduction of Ethereum supply, massive yields from staking, which increase with network activities, and many other advantages. This is probably why, despite the massive bear market declines, Ethereum increased by over 50% earlier in the month when the final merge date was announced. In Pal's broadcast, he compares the staking of Ethereum tokens to stock buybacks, a process where corporations reduce the supply of their equities by buying them back to generate demand and reduce supply. The former Goldman Sachs executive points out that buybacks are one of the key reasons why the US markets have performed better than other markets. He believes the same thing will happen with the Ethereum network after the big event in September. In addition to the other advantages, Pal also explains that the merge will make Ethereum more appealing to corporations that have ESG ambitions. Please listen to Raoul Pal's explanation.
Bitcoin is deemed by people to be less green. We know that narrative is a false narrative, but that is what institutions kind of believe, and they struggle to get it past their boards and their investment committees because of it. But Ethereum will be much greener. In fact, it's 99% less energy use than Bitcoin once it moves to proof of stake. So that removes that barrier, and that's a big stumbling block for institutional adoption. But there's something more important, something that most people haven't thought out, which is that Ethereum is going to have a yield of 4 to 6%. That's the best guesses. So now we've got the internet bond. And I know people have used that terminology before, but they haven't really joined the dots as what that means. Ethereum being the largest yielding asset in the space, it has in ETH terms, a risk-free yield because it's generated by a smart contract. So it pays out yield in the smart contract. Now, the risk you're taking is currency risk, ETH. And again, people need to understand what these terms mean because there's a lot of bullshit online. So what you've got is pretty much a guaranteed yield from ETH. Obviously, there are things that go wrong. US bonds are deemed risk-free, but they're not. Nothing is in the world. But you know what I mean? This is a benchmark yield for Web3 from the largest asset in Web3, because Bitcoin doesn't have a yield in the same way, and it's not really used in Web3. So you want to allocate to this space. You are going to allocate to the ESG-compliant yielding asset. That is without question. Also, it's easy to say because it's not to do with money, replacing of money, it's technology. This becomes like a technology stock with buybacks and dividends, which is bloody rare. And it's the fastest growing technology in the world. So this yield changes institutional adoption dramatically. It makes it so much easier to hold on balance sheets. One of the reasons why gold was not adopted by many institutions is because it doesn't yield anything. But this does, and the yield is decent. It's more than US Treasuries, as it should be. So, okay, now we've got something interesting for institutions, family offices, long-term investors.
There have been many disappointments and postponements, but it seems the Ethereum team is finally ready to go through with the merge. The support from investors has been massive, and it will only grow if the team can deliver all that has been promised. What do you think about Raoul Pal's broadcast and the much-awaited Ethereum merge? Please share your thoughts and observations below. And don't forget to give this video a thumbs up and subscribe. Thanks for watching our videos.